I'm living in the moment of your timeline right now. People are getting divorced, things are going on, turbulence in the market.
When you go to events and all the people you kind of are starting to look up to are getting destroyed, part of you is like, wait a minute, is that going to happen to me? And it went from failing to raise $500,000 to raising 640,000 to raising 220,000 to raising my first million to 2 million to 5 million to 15 million, and now I've raised $100 million.
There's automations to tie it all together and CRM systems. So you built a business around this, is my point.
Based on the fact that you're talking to someone that's consulted from the IMF and you seem to know what you're talking about.
It allows you to get a free networking session and masterclass for an hour with an expert, right? Think about all the stuff you've learned over the years. There's no gatekeepers. Hunter, officially welcome to the Wealth Juice podcast. I'm so excited to have you on the show today, man. I told you I read your book. We've been running in the same circles for a while now. So finally good to put a face to a name and have you on the show.
Yeah, excited to be on. It's an honor.
Thank you, man. Thank you. So let's start at the beginning. Who was Hunter before real estate, got woven into your journey?
Man, so I have been in this game for about 15 years. So I started around 2010. And before that, I've been a lot of things. I'd say, generally speaking, I was a slacker in school. I was a you can't tell me what to do type of person. I was a, hey, everyone's doing this way. I'm going to do it the other way. I'm going to be the exception kind of vibe. Everything from business, for sure. At a very young age, I was very interested in, but also wanted to kind of make my own path. And that drove me to be an entrepreneur early on. I had that pursuit. When I was in a band, I used to sell parking spots outside my mom's house because we lived near a concert venue. And then later ended up playing online poker during what's called the poker boom. And that was kind of my first real success as an entrepreneur. If people aren't familiar, I was actually from Memphis, Tennessee, and that's where I'm from. Somewhere around 3.5 hours away from Memphis, someone legally named Chris Moneymaker entered a tournament, which I believe from memory was a $7 tournament. He won that tournament, and that got him a free entry into a $200 tournament. And he won that $200 tournament. That got him a free entry into the main event, which is you typically have to pay $10,000 to enter that. And then he won the main event and won $1 million. And it was an incredible success story that created something called the poker boom, which is a multi-billion-dollar boom of interest into the poker world. And because there was all this stream of new money coming into that world, if you took it seriously, if you read a bunch of books, if you got a coach, you could make 6 figures, if you just focused more than other people. And that was kind of the first time I realized, listen, if I just take it more seriously than everyone, if I try to make it into a business, I will beat the competitors. And that's what happened. I had my first 10K month in 2007. My next month was a 20K month. My next month was a 30K month. And I was like, I'm going to be the richest person alive. And I went all in that summer, 2007, and played full time for 3 months and made really good money, but fell out of love of poker. And then 2 things happened almost at the exact same time. One, something called Black Monday took place, which is when the United States government made it illegal to play online poker. And simultaneously, the real estate market collapsed. And 2 things took place. One, when the government made it illegal, they made all the online sites give the money back to all the poker players, which happened, except for one site, the biggest site, Full Tilt, which was found to be basically a Ponzi scheme. And a lot of the owners had embezzled the money. And I was out when that took place, but I was very, very fortunate to be able to have missed that bullet and have started moving into the world of real estate around 2010 or so. And that's my story, man. That's how I got into the business. That's how I started. That's how I made my first investment.
Very unique story, man. Wow. I actually had no idea about that. And it's funny because I vividly remember Chris Moneymaker climbing the ladder, getting into the tournament, and then winning. He was the guy who had the sunglasses, right? And no, you can read his poker face. And
yeah, I mean, it's wild when you look back on it. It's very difficult. I mean, this is an exercise in kind of human psychology, but the game of poker is kind of similar to the game of jiu-jitsu. I don't know if you've ever watched any of those early UFCs, but have you watched any UFC, just for context? I'm sure some of your audience.
In general, yes.
Okay, cool.
100%.
So it's really interesting. At the beginning of the UFC, if you knew jiu-jitsu, you basically had like a superpower and could win. And Royce Gracie was the first person that knew jiu-jitsu in the UFC, and he beat everybody despite having a pretty significant weight disadvantage. And this is before there were weight classes. But if you go back now and watch the UFC, their jiu-jitsu isn't very good. Their jiu-jitsu isn't very good because it wasn't really battle tested against other people that really, really, really knew jiu-jitsu, especially not mixed martial art jiu-jitsu. Same is true for poker. So the game evolves as the competitors get better. If you go back and watch the early poker of Chris Moneymaker, it's like, to the trained eye, it's like they're so bad at poker. And in terms of human psychology, you can't help but be like, dude, I'd have beaten everyone back then. But who are you looking up to? Those guys. If you got a coach, who would be your coach? Those guys. So like, it's hard not to think that you would have beaten Royce Gracie in 1994 at jiu-jitsu if you've watched a lot of high-level jiu-jitsu now. Same kind of thing is true here. The reason there's a tie into the conversation we're about to have is that the same is true of market timing. You know, I got into the business in 2010, where now it's easy to say, oh, dude, I'd have done that, you know, but you couldn't see the rest of the chart in 2010. You couldn't see. What you could see at the time was tailspin of foreclosures. All your friends and family members had lost their jobs, or some of them had. Some of them were going through divorces because their financial situation was getting crunched. You know, that's the beginning of my career, was going all in when everyone thought you were insane for even breathing towards the real estate sector.
I love it, man. So, all right, I'm living in the moment of your timeline right now. People are getting divorced, things are going on, turbulence in the market. You can't see the charts. What did you do next? How did you actually like make your mark in real estate? I know it wasn't immediate, but talk us through the strategy, and then we'll get to your claim to fame here in a couple minutes.
Yeah. So, I mean, first of all, this story that we're going to unfold here is a lesson in understanding market cycles. And there's a reason I'm going to talk about that a little bit, because I know a lot of your listeners are just getting started. Some of them have done a couple deals. Some of them might have done millions of dollars of deals, but they're still earlier on in their entrepreneurial journey. And when you get into this space, you hear this term market cycle. There's books about it. Even billionaires talk about this concept. And when you're just getting started, you can't truly understand it. You can't, because I got started in a time where my attitude was, what is wrong with everyone? It's clearly the best time to buy in decades. Why isn't anyone doing this? It's 2010. There's blood in the streets. Don't you know that it's good to buy when there's blood in the streets? And there's some truth to that. And it was a very good time to start my career. But when I started going out to real estate events, people's head was in their hands. People were crying. I mean, it was devastating. And I was there, having not been wiped out, being like, why is everyone so upset? Don't you know that this is like the opportunity of a lifetime? And the reality is both can be true at the same time. And, you know, what I'm going to unfold over the next couple of minutes here is that there's a reason that the market cycle exists and will always exist. And there's a reason that new market participants think they're going to beat everybody because they haven't lived through it yet. And that's what my attitude was. But getting started when it's really, really difficult, it can quickly turn into, oh, well, of course it was easy for you. You got started in 2010. But they didn't know that when you go to events and all the people you kind of are starting to look up to are getting destroyed, part of you is like, wait a minute, is that going to happen to me? And you kind of got to get through that. So that was the beginning of my career, you know, trying to rub two sticks together when there was zero transaction volume, there was no lending, and everyone was getting murked. Yeah.
So I just want to talk about the psychology on that too. And like this whole thing goes in cycles, and I've been studying a little bit more frequently. I know it's a hot topic, but like the crypto markets, because I'm in real estate, I have a bunch of stock, and then I'm like, okay, what's the next thing? Can I dabble a little bit in this? And it's so funny where there's a bunch of things that get pushed into the media, everything. And this isn't just crypto. This is just the market in general right now, 2025, since Trump's been elected, it's just been a little bit back and forth. You know, people, I think an immediate fix always happens right away when people get elected, but there's always turbulence. And then you have the tariffs going on and everything's shaky. So my point is, there's always these little hiccups and moments in in the timeline of the economy that where people are just like, they're afraid to jump in and it doesn't seem right. And that's where 99% of people get stuck. And they just think it's always that pessimistic view where they're like, oh, well, there's never the right time. Because truly, there is never really the right time. You're going to sometimes enter on an upswing, sometimes enter in a downswing. You can always look back in hindsight and say, well, I wish I got in earlier. But the perfect time, I just want to say this, it is now. You just have to weather the storm, punch through it, and then adapt to the ever-changing market. But having said all of that, I'll let you continue the story, but I want to really bring up in like the theme of this episode, and we're going to go into raising capital for real estate. And you actually wrote the book titled Raising Capital for Real Estate. And I found that, Corey and I have gone through our journey. We went from 0 to 80 units in the last 5 years. And we've had to raise capital for some larger multifamily deals that we've had. And we found, and kind of, I read a couple different books. Yours was one of them, which I absolutely loved. I actually have it in front of me here for people that are watching, but I've highlighted tabs and I just use it as one of my, like, I have like 3 or 4 books that are like my Bibles, right? And I just keep them with me all the times. I'm like, what? I got to go revert back to this, make sure the systems are in place. But let's talk about why raising capital is such an important skill for real estate investors, and maybe how that kind of jumps into the stage of the journey you're at right now in your story.
Yeah. So, I mean, the thing that I quickly found out, I was kind of introduced to this concept of passive investing. And I understood for the first time how a lot of these larger deals are structured, which is that you pool investors together to buy more quality and larger assets. So let's say, rather than buy a $100,000 property with one investor using $30K as a down payment, borrowing $70K and buying a $100,000 house, you might get 100 investors together to buy like a $20 million property or a $50 million property. And so that was like the first deals I was ever involved in, just because the people that I was mentored by, the people that I found who were able to weather the storm were buying larger assets, typically speaking. And also it was just, I was more drawn to that from a personality standpoint and who I wanted to work with. Most importantly, I wanted to work with savvy people that were making or losing millions of dollars. And I say or losing because I wanted to make sure that there was a lot to gain or lose if they perform. And if they don't perform, they would lose a lot of opportunity cost. And so that's who I wanted to invest with. And so that's the first deals I ever invested in were syndications of commercial real estate assets. And in particular, at the time, I was very focused on the mobile home park business and the self-storage business. And basically, I found an operator, which is someone that's not just managing the property. In fact, the operator would probably manage the manager, but the person who is looking at the deals, buying the deals, talking to brokers, raising the capital, going on the loan, basically doing all the dirty work of a real estate transaction. They would raise capital from passive investors who would fund their deals, meaning come up with the down payments to purchase assets, the equity to purchase assets. And so as I learned more about the space, I realized, man, it's going to be very difficult for me to compete with one of these operators, right? Like they already have years of experience, hundreds of millions of dollars under management, systems and processes and software that would take me years to do. Plus, if I go to try to compete with them, what am I going to say about my track record? It's going to take me 10 years to have a track record like theirs, and I don't want to wait. And so what I did was, after I invested passively with a bunch of different operators, I found an operator in the mobile home park business that had basically done exactly what I wanted to do and basically said, listen, I don't want to ask for a favor. I'm not trying to ask if you'll make me a partner in the deal. I'm not trying to ask, hey, can I try to find deals? Because I know you already can. But I know that you guys need more money, because otherwise you wouldn't be interested in having me as a passive investor. So I basically said, if I could raise $500,000 and just show up on your doorstep with the $500,000, would you give my investing entity, its own separate entity, would you give it better economics than a typical 50K or 100K investor? So like in a typical real estate deal, there's usually a preferred return and a split above the preferred return. Let's call it like a 7% preferred return followed by a 70-30 split, 70% going to the investors, 30% going to the operator. And so I basically said, hey, listen, if I invest $500,000, would you give me an 8% preferred return versus a 7 and a 60-40 split versus a 70-30 split? like about 33% better than the typical investors are getting. And they said, hey, listen, if you just show up with an LLC that has $500,000 in it, we'll give you that better economics. You're not going to get any additional control rights. You're not going to be able to tell us what to do. You're not going to be able to tell us when to sell the property. We're not going to give you more intense reporting. But sure, we'll give you 33% better of a deal because you're bringing 10 times a normal investment. And I said, okay, cool, it's on. Now all I got to do is raise $500,000. I promise I can do it. And, I'll stop the story there because I talked about some structural stuff. I want to make sure everyone's on the same page. But any questions about that, Ryan?
Yeah, I actually love it. So structurally, I want to talk about the difference between, we've seen it two different ways. One, raising capital for deals where you bring separate investors, but they're not in the LLC. Can you talk about the difference between bringing them separately and then also the thought to bring them all within your LLC and like how you manage that?
Yeah. So at the time, I didn't know this term. It was something that has been around in private equity forever. But to me, I basically invented it. Like what I mean by that is that I thought of this structure and did it, but it wasn't like I actually invented it, right? But it's called something called the fund of funds structure. Basically, I pooled investors together to invest in someone else's deal. Now, you might be thinking, well, why would anyone invest in your LLC when they can just go directly? And there's two reasons. One, what I just talked about, the economics I negotiated were such that they didn't really have an incentive to go around me, right? And what I did, and well, I'll talk more about that in a second. The other one is that they wouldn't have access to this deal without me. So if they tried to circumvent me, they would know their access to these deals is going to be gone. And the combination of those two, in my career, I haven't seen much of it. Now, I am not going to pass through the extra 33% that I negotiated. All of that's not going to go to the investor. In fact, that's going to be my compensation effectively for doing this whole enterprise. I will receive that 33% through my LLC at the what's called the fund of funds level, meaning all of the money will go to the LLC. And in the event that the thing performs, Hunter Thompson, will receive the extra 33% or so. The LLC investors are going to get the same deal as if they had gone direct. No one's really in a position to complain. And the beauty of this is multiple fold. One of which is that my investors get to invest in my LLC. I control their entire experience. I control the communication. The operators don't have access to my investors, so they can't market to them directly. And also, the entire system is built on me, my brand, etc. But I'm leveraging someone else's system, operations, track record, background, to say, hey, listen, I don't control this deal. These guys do, and they really know what they're doing. And it made my first capital raise go a lot easier than it would have. Now, we'll talk about the details of how it actually went, but it certainly started off on a good foot, as opposed to me going, hey, I'm Hunter. I've never done a deal before. Are you in or out?
Love it. Okay, let's talk about that because I do think a lot of people, they'll raise capital and they don't put it in the LLC and they just make, they go in as a co-GP or something like that. There's another structure. Maybe you could talk about that.
Can we talk about that briefly? Because I want to make sure we talk about this. That's how most people typically structure deals. And it's a good and tried and true method for structuring deals. But let me break down what it is and we'll talk about some of the strengths and weaknesses. So the term he used was a co-GP. And that's when, let's say I'm an operator and I'm buying deals directly. Someone comes to me and says, hey, Hunter, I have 30 dentists that want to invest with me. Can we partner on a deal and I can bring all the money and you can do the kind of the work and we can split the profits 50-50 or something like that. That's kind of like a very typical tried and true and pretty appropriate from a regulatory standpoint structure. But what you don't want to do is get in a situation where you're partnering with like 6 different people or 30, which I've seen, by the way, and everyone's raising different amounts of money and everyone's ownership of the LLC is based on exactly how much money they raise because the SEC prohibits compensation based on how much money you raise for what's considered someone else's deal. Even if you're in the deal and you're really only getting money based on how much you raise, the SEC is like, I got a problem with that. And if they can reverse engineer your ownership being tied to how much money you raise, they're going to have a huge issue with that. So I didn't want to get into that regulatory conversation, but also I only wanted to do this with people who were like well along their path as fund managers or entrepreneurs. So as an example, if you go to me as a person right now, in today's environment where I've been in the business for 15 years, we already have a business. We don't just partner with random people that say they can come up with money. It's a very, very difficult conversation where it would take years to be a partner on a deal with us. So I didn't want to wait years. I didn't want to convince someone I actually knew what I was doing. I just said, if I do show up with $500,000, will you give me extra economics? And it was a way to reduce the risk and also not, make up a story about how I should be a partner.
Yep. I love it. Super helpful. So let's talk about this. Now we know like the importance of raising private capital, right? And pulling people together and be able to take down larger deals. So can we talk about like a step-by-step mini roadmap for raising capital as a beginner for someone that's just starting out?
Yeah, I'll take it back to my story and I'll keep it brief. But what I did was I had that cool structure. I had an operator that had a track record. I'm very fortunate. I was from a family where I knew accredited investors. You know what I mean? That's the reality of the situation. I threw a luncheon, 30 accredited investors were able to come. And that's not something I take for granted, but I'm going to leverage it, obviously. And I made this pitch for this mobile home park business, which by the way, at the time was trading at 10% cap rates. You could buy a property in cash. It would produce 10% returns if you did nothing. In a room full of people that have all their money in the S&P 500 or bonds producing 1%, 2%, 3%. So I was like, this is going to be a no-brainer, right? And what happened was I gave the pitch of a lifetime. And as you know from reading my book, after my pitch, I gave a piece of paper out to all the attendees and said, hey, listen, the minimum investment is $50K. So just write the number of dollars you want to invest. Fold your paper so you can keep it private and hand it back to me. And, take some snacks and I'll see you guys soon. Thanks a bunch for coming. And I had promised this operator I would bring $500,000 to the table. All I needed was 10 of the 30 people to do $50K, let alone if somebody was like, yeah, $250,000. And after the lunch, I unfolded all the piece of paper and no one had written anything. No one had written on the paper. No, I'm interested, call you, here's my number. Nothing. There was 0 things written on the paper. And so I failed miserably. And so your question about what's the roadmap? Usually the roadmap starts something like that. And, the reason for that is that when you get into this space, you quickly uncover this for yourself. You didn't get taught this from teachers. You read Rich Dad, Poor Dad. You started going to seminars. You hooked up with Ryan, started listening to his podcast. You go, dude, no one knows about this. How am I the only one that knows about this? This is insane. When I share this with my friends and family, they're going to go bananas and they're going to be so grateful. And what happened to all of you and me is that they go, yeah, bro, I'm not interested in this. If I was, I've been doing the same thing you are. I'm going to move on with my life. I'm a high income dentist and I'm going to keep being a dentist and keep moving on. And so that's the way most capital raiser journey starts. And then you got to realize, I don't want to beg people for money. I don't want to convince this dentist that's not interested in real estate to invest in real estate. I got to build a brand that's going to attract dentists, doctors, lawyers, pick a niche that are already interested and are kind of tinkering with the idea and have them attracted to me so I don't chase anybody around for the rest of my career. And that, my friends, is exactly what I started doing when that happened. And it went from failing to raise $500,000 to raising 640,000 to raising 220,000 to raising my first million to 2 million to 5 million to 15 million. And now I've raised $100 million and been responsible for the acquisition of hundreds of millions of dollars of deals directly and billions of dollars of deals indirectly by partnering with other operators. And that's my story. And I'll be happy to share all my secrets, but that's where this story is going to go.
No, I love it. And it's what intrigued me so much about you. I did some research before buying the book, as anyone would. And we were in that space where we had people asking us to partner on deals. We were trying to vet out specific operators, going through that. And like, we knew we wanted to scale up in the game and take down bigger deals. But I was like, I want to do this correctly, appropriately, and not, basically didn't want to didn't want to cross any lines with the red tape. So do it. So who am I going to go read from? Someone that's raised $100 million. So I read your book and a couple other books that I won't mention here, but I loved it. It was really a personal approach to not only your story, but then tact, right? So I learned things from building a brand, establishing a track record, a pitch deck, a webinar. Like there's so many things in this, automations to tie it all together, and CRM systems. So you built a business around this, is my point. It's not just like, hey, I'm going to sit down next time a deal pops up. You have to vet an operator. There's so many different ways we could go about attacking this conversation. But for someone that is, tracking along with us here on the story, and they're like, hey, listen, like I want to get into the bigger deals. How do I go? Let's start here. You said build a brand. Take me from building a brand, and then what other steps do I have to do to kind of get myself from A to Z?
Yeah. So listen, I am a huge fan of Alex Hormozi. And if you are listening to this and you haven't read his books, I totally suggest them. In particular, $100 million Offers is a great way to think about business, and it'll start to agitate you to solve some very difficult questions, which are hard to solve. But if you solve them, you'll make more money than anybody and have more success. And whatever that means to you, you'll have it if you can answer some of those questions he puts forth in that book. However, I don't agree with everything he says. And one of the things he says that I do not agree with is that if you really want to make it, and if I'm misquoting him and he hears this, I'm sorry, buddy, but basically the general thesis is, which is his story, go out and have incredible success that would put everyone else to shame, and then go make a podcast, and your podcast will be better than everyone's, right? Because that's his story. He went out and made Gym Launch. He took it from $0 to $2 million a month in 18 months. Again, $2 million of revenue a month in 18 months, and printed more money than anybody. He made $17 million in a year net profit. And then he didn't have any Instagram followers, right? And I followed him, by the way, when he had 20,000 Instagram followers, because I knew that story. Then he had a YouTube channel that went from 0 to 5 million or whatever in like 12 months. So I know that that's his story, and I know that he's being transparent about trying to give good advice. The problem, though, is that it's very hard to go and make Gym Launch. If you're going to go and wait to the next time you make Gym Launch, you're going to not be making the thing you need to actually do, which is to create content immediately, which is my opinion. And it doesn't mean that you go out and say, okay, I'm Hunter Thompson. I've never done a deal. Listen to me about all the ways you can make money in real estate, even though I've never made any money in real estate. But what I did do was say, I got the former consultant to the IMF's email, and I was able to interview him for an hour about the economics of the market in 2011. Okay, that's valuable. It's not about me. It's about me being like, yo, this guy says this, and that's a fact. And that's interesting to me. It's interesting to my market. And I was able to play the role of the interviewer for years. And when you play the role of the interviewer, a couple things happen. One, you get to reach out to a consultant of the IMF. Two, you get to learn from that person. Three is that your reputation, credibility, and track record is to a certain degree assumed based on the fact that you're talking to someone that's consulted from the IMF and you seem to know what you're talking about. And so I was able to leverage other people's track record, background, notoriety, reputation, and I can, mention names that all of you have heard of early in my career before I'd really done much. And I just never lied about the situation. I just said, it's a fact. Grant Cardone's raised $1 billion. He said this. That's a fact. I'm not saying it's a fact that it's true, but he said it, and that's the thing I'm reporting on. And so I suggest everyone do that. And just for context, I'm making a YouTube video right now. Hey, by the way, if you're listening to this right now, free shout out, go to youtube.com, search Hunter Thompson, capital raising expert. I only have a couple followers on YouTube, but it's some of the best content ever created. In the world of podcasting in particular, iTunes has put out multiple reports on this. 90% of people bail after their third podcast, 90%. The remaining 90%, of the 90% that bail, the remaining 10%, of that 10%, 90% bail after their next 20. So the exact number is, if you make it to your 21st podcast or 22nd podcast, I guess, you are in the top 1% of podcast producers in the world. So you just don't quit. And I've done over 1,000 podcasts right now. And the reason I've had some of the success I've had is just you got to keep going. And if you just keep going through the hard part and the part that you think, oh, it's not really worth it, you will eventually become an industry titan because no one will be left, especially if you make it through a market cycle. And that, my friends, is the secret to all this stuff, transcending raising capital, but in business as well.
Dude, I couldn't agree with that more. By the way, big Hormozy guy as well. Read both the books. Actually, I have the purple one and the blue one. I think $100 million leads is the next one. But side note, we've done the exact same thing. Podcast, the world shut down in 2020. We're still working our W-2 jobs. We're like, we're not sure what to do. We have 1 to 2 real estate units. We want to be in real estate full-time eventually. We want to retire early through real estate. What do? Business partner says, hey, dude, we should start a podcast. I'm like, I don't know. Like we have nothing else to do, dude. Let's do it. Then it started from us sharing stories that were kind of basic. Everybody's like, okay, we get it. But our shtick was, we're not going to be the guys teaching you about 1,000 units. We're going to teach you the journey, and you're going to kind of evolve with us. We had a few big names, take a shot, come on the show, say we did a decent job. They referred us to their friends. You know the deal. I'm sure you did the same thing. We can reference a bunch of the big names, but it establishes you as an authority in the space. It allows you to get a free networking session and masterclass for an hour with an expert, right? Think about all the stuff you've learned over the years. There's no gatekeepers. The best part is you're cutting right to the top dog. You don't have to worry about an assistant. If you can get them on the show, you're talking to the head of the beast, which I love. And then there's also an art to staying in touch with people and all that we can get into. But I full-heartedly agree with you. We have a mentorship program teaching people at the very basic level, hey, how to go to zero to buy your first unit, right? And like start your portfolio off the right way. And then you can scale, go see other people to scale up from there. So I say that the podcast has played a crazy role in that. The Instagram and social media has been a digital resume for us. And that's the way we've been able to communicate with people from the podcast. It's not us just preaching. It's like, hey, we need help with, let's talk, let's offline, let's hop on a Zoom. So big believer, backing you up 100% on the brand. It started with the podcast and then evolved to social for us. How do you weave in from there, right? There's so many tact to building a brand and we can go into that, but really I'm looking forward to I understand the brand's so important. Then what's the next step? Do you establish a track record? Do you build out your pitch deck from deals you've done? And I know it's different in the beginning when maybe you haven't done a ton of deals. So, kind of what's the next stage here for people going through it?
Well, let me give you just one quick one on the build a brand thing, because sometimes this is not the first time your listeners have heard that, but there's a lot of listeners that haven't done it yet. They haven't done anything about it. So what does that even mean to them? So let me give them one little nugget that they can go, okay, now I know what to do. If I don't do it, it's on me. So with the help of ChatGPT, this becomes way easier as well. So I would just pick a niche that you want to serve. Okay. So this means someone with a background, a mission statement, a core value alignment, something usually tied into your background that you're emotionally connected with. And it can be about your professional background, but it doesn't have to be. I'll give you a couple examples: dentists, doctors, lawyers, but also people that like boats, people that like to travel a lot, people that love to fish. Whatever about that you believe is like a big part of your identity, that the aspirations, the goals, the pain points, the traumas, the trials and tribulations of, that, my friends, is the niche that you should go after. And there's no risk if you haven't done this yet. So just pick one and go all in on it, right? Then you kind of go to ChatGPT and say, what is 10 things that dentists need to know about investing in real estate? And ChatGPT will spit out 10. And what you can do then is just do 10 8-minute solo episodes on a podcast that you record. You don't have to do a podcast every week or 5 a week for the rest of your life, but do 8-minute podcast episodes where you just answer those things. And you should be able to do that, right? Like, why investing in real estate when interest rates are low, blah, 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 blah. Or why dentists need to think about diversifying out of their practice because it will help them achieve financial freedom that might be not achievable if they continue just being a dentist. I'm sure anyone listening to this, you can riff on that topic for 8 minutes. And if you can't, you gotta be able to, meaning that going through this exercise is going to help you dramatically. Something I talk about in my book is trying to write out 100 of these topics and then picking 10 and then doing the same exercise. Now, going through that process of 100, I actually really like that, even though we have ChatGPT already, because you got to get in the habit of thinking about these things. Like, let me just sit down for an hour and a half and try to come up with 100. You can come up with 100 and then pick 10 that are really good. To me, that is the beginning of your brand. You can write an article if you prefer articles versus podcasts. You can talk about it for 8 minutes. I promise you can do it. Upload it to your website. And then, my friends, that's your brand. And if you have 10, a lot of investors aren't going to scroll and see if you have 11. They're just going to see that you have a brand, that they're in the right place. If I'm a dentist and I see a website that says, we help dentists achieve financial freedom, here's our 10 podcasts, I'm going to be like, this person's in the game. So that's the hack. Okay. Is that fair?
Totally fair. Actually, thank you. This is brilliant. So maybe we'll do a quick mini masterclass on me. So right now, we are teaching busy professionals how to buy their first or next investment property in 2025, rental property. But once again, top level. Who isn't doing that? That's teaching real estate right now. So my issue is drilling down from that busy professional. I'm trying to hone in on my avatar. I know it's the 26 to 44-year-old that's busy making 6 figures. It has at least 30 grand in capital, right? I can drill down, but I love what I'm really stuck on is you mentioned the dentist, you mentioned the doctor, you mentioned the lawyer. Like I'm not none of those. I don't have the world experience of those. And typically I'd venture to say those individuals that are making high clip, they should go in the syndication route. That's purely what I've done for other deals. But for me, I'm like weeding this down where I'm like, okay, the avatar of my podcast, people that are listening, where I was 7 years ago starting and I wanted to build my portfolio. I'm in sales. I could maybe go the sales route. My business partner was too. But I'm just trying to figure out maybe just a little strategy here. Like how would I weave down from that? Because our program, we have a bunch of walks of life. I have engineers, I have law enforcement people. I do have a doctor. I do have a lawyer. I have a CPA, like a wide range of people. I really tailored it more so for the dollar amount where at least they're making 6 figures. I'm not sure if you've had this before, but I'm curious, what you would take on that.
For sure. So I'll kind of share something with you. So as you know, I run a coaching program called RaiseMasters, which is like our mastermind under my business name, which is raisingcapital.com. So we have an e-learning business, a coaching program mastermind where we help people learn how to raise money. And we've helped hundreds, like almost 1,000 capital raisers raise 6, 7, 8, and 9 figures, just as members. And, when I'm speaking like on a podcast or speaking from stage, I use the professional background a lot because it's so easy. You don't have to be a good marketer to just know, okay, dentists, what problems do dentists have? The nuances, the reading between the lines, there just doesn't, you can be a white belt marketer and like crush that exercise. Cause if you are a dentist, you know the pain points of dentists, say it and they'll resonate with it. You know what I mean? But the question you're asking is like getting into this blue belt, purple belt kind of conversation, which is, I don't want to rely on the profession thing. I want to rely on something a little bit more nuanced, like a pain point or an income level or like a last straw moment. I know because you're familiar with me and I'm sure other people as well. And you can, just me saying those words, you can think about that stuff. And so what I'm going to tell you is that if you're willing to plant your flag in the ground and say like, these are my people, I'm over here, this is the line in the sand, my people are over here, you're over there if you're not with me, whatever you can do to double down on that type of attitude, you will call your people to you. Okay. That's number one. The other one though, is that I have some of my like elite level guys do a lot of investor and dream client interviews to uncover common threads that all of them have so that they understand the language to use in their brand. And so what I would tell you is I would reach out to 3 to 5 of your like dream clients and interview them. And I would say, hey, listen, I hired a marketing coach. You can blame me. I hired a marketing coach. He told me to find 3 of my best clients, people that I want to build a business exactly like, and just interview them for 15 minutes about like your experience and why you invested with us. First of all, that's a great email to see, right? It's like, damn, that's so great. And by the way, it's really good for referrals and brand equity and these types of things. And you just ask them very pointed questions. I'll give you some examples. How'd you find out about us? Why did you go with us versus some of our competitors? Were you looking around in terms of our competitors? What do you think about the market right now? What are you most concerned about? What would be the kind of deal that you would jump out of bed or you eager to do? What's the opportunity that you're looking for? What's the opportunity cost if you don't take action? Just pulling out what the answers are that you want to hear really. And then without putting words in their mouth, if you're able to use the exact language, vernacular, emotional buy-in, you can hear your brand being developed with your ears. And then you just put their exact statements on your website, podcast, newsletter, etc. And then your best clients will be like, Ryan read my mind. He met me exactly where I was. He knew exactly what I was going through. And it was like, dude, there is no competitors to Ryan, because there's no way someone else could just hit me right in the heart, because he's spelling out exactly where I am right now. And that is how you work your way to being a black belt marketer, is the person who, when you talk to your dream clients, they go, dude, I feel like if we could spend a couple of hours together, we would be best friends. You just crushed it, right? And so that's, I will say, what we've built at two companies, right? ASIM Capital, which is my private equity company, and raisingcapital.com. Raisingcapital.com, people pay us tens of thousands of dollars without any kind of formal due diligence process, because their due diligence process was skipped because we hit them right in the heart when it mattered. And that is what you can do for your business as well.
It's a couple things. First of all, thank you for that. Very
100%.
concise too. That was like ace. So my next thought is, one, I'm probably two in my head. Are you telling me I'm two in my head about having to dial in the specific niche? I always hear riches are in the niches. I don't need to worry about the dentist, the doctor, as long as I'm talking about the pain points and positioning myself, my like basically the feelings that they're going through, that I'm in a good spot. Because I will say, most of the people, we vet out people that we allow into the community. Most all of them are like exactly what we're looking for. And they're like us. They're exactly where I was. And I don't know how we got there. It's through, once again, looking under the hood, going through the pain points, talking about it, speaking to our avatar. But to get more of them is like, okay, how do you get more leads? I'm reading the $100 million leads. Yeah. We have an ads consultant. Trust me, I'm like, we're dialed, dude. But I'm trying to think of like more granularly, is there other things I could be doing? And maybe do I need to shut my brain off? It doesn't have to be a specific profession that I'm going after.
Okay. So we're definitely getting into like, and I don't use this analogy frequently, but I've used it in this conversation, so we're going to keep going with it. Now we're getting into like, for sure, like purple belt plus type of conversation.
Yep. Totally.
And so that's cool. But just keep in mind that that's the case. So if you're listening right now and you haven't done my exercise of like doing the 10 podcast, just freaking do it. Just freaking do it. Because like, I don't want to hear this question from you in a year and you still haven't done it. Because it doesn't matter. Like the nuances of like getting it perfect and all this stuff, it is totally inconsequential to what happens when you try and get market feedback. There is mathematical reasons for this. There is the psychology reasons for this. You just got to go faster than your competition and you will beat them. And like iteration is where the money is made, not in getting it right the first time. Now, Ryan is doing it. Okay. He's making moves. He's got market feedback. He's like trying to tweak knobs. So I'm willing to kind of engage in this. It is not that the riches aren't in the niches, which I know isn't what you're saying. It's that the niches should be viewed with a little bit more of a broad lens. And then you train your ears to like learn how to double and triple and quadruple down specifically on what's working. And then you start speaking in hooks. You start speaking in pain points. You start speaking in saying things that would only apply to your clients. And then they are like, dude, he just spitting piping hot fire about me 7 years ago. I gotta call him. And so like, as an example, it's not about like ads targeting. Like, oh, you want to focus on sales professionals. It's not being like going into Facebook Marketplace and being like sales professionals. It's about like starting things out with like, hey, listen, do you already have 2 sales managers and looking to get your third? Like that's a hook that only would work for sales managers that are already in the game. And like, maybe that doesn't apply to you, but get my point. Most people will be like, how many freaking sales managers already have 2 and they're looking to get their third? Not many, but dude, if you only have 100 clients, you can be one of the richest people you know. And so as you get into this purple belt conversation of marketing, it's about how to best slam the gas towards those 100 people so that they are just like, all in on you and your business, because if they invest 50 grand with you once a year, which would be like not that good, you're buying 15 to $20 million of deals a year.
It's massive.
Does that make sense?
Yeah, 100%. No, I was letting you talk. So I think I maybe took it a little too selfishly on this one. So I just I needed the expert guidance there, because we are at that purple scaling close to the black. I'm like, okay, what am I doing here? But let's bring it back to people that are listening. They're like, Ryan, shut up. I get it. You're trying to scale something. So we talked about the personal branding, super important. We talked about narrowing down, trying to find your niche. What's next? Do we go to the track record conversation? Do we go to building a pitch deck? Do we go to just take me, maybe kind of breeze through it a little bit. I know we're coming up at the top of the hour.
100%. And by the way, you know that I'm always down to go into the details. So maybe next time I come on, we can do only like brown belt, black belt stuff. I'm happy to do that. I mean, I've spent $1 bajillion on ads. I've done events that have produced millions of dollars of revenue in days. Like, we can do all that stuff. But as far as the next steps here, I am always looking for ways to shortcut things. And so, developing a track record, that takes years. In real estate, you can go 5 years without selling a deal. What I want to do is give you guys, everyone listening to this, the shortcuts. And so from my perspective, the easiest way to shortcut a lot of those conversations, including pitch decks, by the way, is to partner with other operators that are already crushing it, doing exactly what you want to do. And if it's not an operator that you want to partner with, it's just a board of advisors. So like anyone you can use to bolster your own business, to bolster your cumulative track record, to get access to the nitty gritty details, especially if they're economically incentivized to make sure you succeed, that is what you want to do. I don't want anybody to wait 5 years to be like, and now I have a track record and now I can actually scale. It's like, no, your first thing you want to do is get as much momentum as possible. And the way you do that is skip the line, constantly skip the line. So there is no detail I can give you that's better than that. Find someone that's doing exactly what you want to do. Try to partner with them. If they won't partner with them, offer them $1,000 every quarter to be on your board of advisors, and then plaster their bio on your website. There you go.
Nailed it. And I think people get too afraid to do that because they're like, well, is that legitimate? Am I actually part of the deal? I mean, 100%. You're aligned in the business if you're joining forces together. And I think one of the main things I want to talk about here is, as we were going through the journey, we figured out you have to find you have to match your skill set with what someone's lacking. One of our partners, he was always finding deals, an expert deal finder, and he could construct the deal. He had the manager. He just couldn't raise the dough, and he couldn't find the community to bring in. And so it's like, once again, the strategy you said within the LLC, you bring the dough. You said, hey, how much of a piece can we get? That's a business lane that we also have experienced and went through. And I loved it. It allowed us to scale our portfolio. So proof's in the pudding. I want to bring this through, bring this to a head here. We've listened and read everything that Hunter's saying in his book, and it's worked. So go read the book, pick up Raising Capital for Real Estate. It's amazing. His podcast, great. ASIM Capital. You've done a lot of great things. And honestly, RaiseMasters was something that we were considering too, before we pivoted our business a little bit. But to be around people that are doing what you are looking to do at a very high level is one thing I couldn't recommend more. So one thing I want to kind of end the conversation with is just, other than any other things that you want to talk about, is the benefit you see of joining a mastermind group or surrounding yourself with a collective group of individuals that are doing what you want to do, and how that kind of positioned itself within your journey to where you are today.
Yeah, I mean, two things. Number one, as I mentioned earlier, I started my business and started this whole journey in 2010, which is in the wake of the Great Recession, but it was also in the wake of a massive implosion of the real estate coaching world. So I wasn't part of this, but think about it. When there is a bubble, there's massive FOMO. And so the coaching industry in real estate exploded in 2003, 4, 5, 6, 7, and then imploded in 2008. And so what that meant was that there was a lot of people that got burned paying tens of thousands, sometimes hundreds of thousands of dollars to people to learn about how to fix and flip houses, sometimes from people that have never fixed and flipped a house. And so my earliest mentors, unfortunately, gave me some of the worst guidance I've ever gotten, which was never pay for coaching, never pay for masterminds. And that probably cost me 7 years. And it sucks. But I know where they were coming from. I get why it happened the way it did, but it really slowed me down. Once I uncovered that if you pay, you can skip the line, essentially, if you pay, you can buy time. I was like, well, how much time can we buy? And, I have spent for sure 7 figures on coaching and consulting. And I've got no problem with that because I have a business that went from 0 to 10 million in revenue in 31 months. So there you go, right? The only way I was able to do that was because I spent more money on coaching consulting than anyone else did. It's not that I'm special or talented. Definitely got the timing right, had the brand positioning right. There was definitely some good stuff in terms of COVID in particular that created some tailwinds. Not taking advantage of not taking credit for any of that. But the reality was, if you can't, once you uncover that if you were to buy a coaching program for $10,000 in our niche, in the making money niche, in the private equity niche, the idea that if you took the coaching program seriously, that you wouldn't get $10,000 in return. I mean, that is laughable. Like at our coaching business, we would be like morbidly embarrassed, which is why if you Google us, you're going to find really positive reviews. It's just not economically possible. So if you take it serious, if you any coaching program that's in the making money space by someone that's actually made some money, you should just be able to execute and have results. So that's kind of my guidance. It's like the opportunity cost, especially with where we are in the market right now, we're talking about like life-changing opportunity cost. So you got to get the timing right. And to get the timing right, I don't want you to wait 5 years to figure it out on your own. I'm sure you will, but it's going to be what? 2030? I mean, the market's going to be fully corrected by 2026 or 2027. So you should got to go now.
100%. We asked ourselves the question, can we afford not to do this?
Yeah.
It used to be, can we afford this? But truly, like based on time horizon, can we afford not to do this? And it was one of the hardest things, I'll tell you this, to join. There's so many different groups out there and they all pitch similar things. But when you get really niched down, that's when it started taking off for us. But the first 10,000 I ever spent on coaching and mentorship, that was crazy because back in the day, I remember putting a $10,000 stroking a check for the down payment of a car or something like that. That was life changing. I'm like, I'm going to do this to pay someone to hopefully teach me so I can hopefully buy the thing that I want. You have to I don't know how to let someone know when I had the epiphany or understood when the right time was. I just had to kind of try it because you're going to don't get me wrong. Sometimes you could get burned if you don't vet these people out and vet the communities out enough. But for us, I've said this a couple of times on podcasts, and you can definitely relate to this. Like we've had coaching through our entire lives, through elementary school, through high school, and then through college, right? Those are in the form of teachers. If you played an extracurricular, whether that's sports or a club, someone guiding you, right? Then you get thrown into the fire of real life and they're like, good luck. And you have no one. You're looking to your left and right at your 9-to-5 job for most people. And then everybody's just working, living for the weekend, hopefully playing your cards right, playing the chess piece right to get a $10,000 raise. Then you take a step back to take 2 steps forward. Like we've gone through this whole thing, right? But for those building businesses and trying to get to the next level, you have to continue to go to school is my point. And you have to invest in yourself and your own self-development. So I just want to back you on that. Like it's the money that we've invested. We've invested well over 6 figures, but it's paid us well over 6 figures in return. And it's for different things. I've done one for social media, one for family, personal wellness, and all these different things just to become a well-rounded person going through life. And so I appreciate you letting me know about your journey too, because I just think it's so vital. And, I don't know what you would say. I guess my question is for people that are still stuck on it and they can't, like, how did you rationale the first time you jumped into a coaching program and say, hey, like, I finally just have to do this?
Well, I think part of the reason you struggle with it, and it's the same that most people struggle with it, is that you're thinking about money incorrectly. You're thinking about money that you make money and then you spend money. And so if you work for several years to get a $10,000 raise, if you were to put $10,000 into a coaching program, you're taking 10 years of that working to get that raise and just blowing it on who knows what. Like, it's not silly. It's like based on the way that you have this mental model of money, which is not based on investment and ROI. And it's not a risk adjusted return. It's, I could have a car. Now I don't have a car. Right. So like that's not the way entrepreneurs think about money. And the reason I said you is that I was very fortunate in some ways that no one would freaking hire me. And so the way I thought about money was much more similar to the way poker taught me to think about money, which is taking risk-adjusted returns and risk-adjusted bets. And so from my perspective, the first coaching program I bought was $5,000. I'm not going to say the name of the company, but I was taught by someone who hasn't done the thing that they were teaching me to do. But what they did was they said, there's a website called meetup.com, and you'll probably be able to meet people in your niche if you go to meetup.com and try to see if there's any meetings in LA. And dude, forget anything else they taught me. That was worth more than $5,000. They just told me to go to someone else's thing. That's it. But if you take it seriously and you do it, I built my entire career going to meetup.com and going to 3 to 5 meetups every single week in LA, in traffic, and that built the foundation of my network. And I don't think I would have done it when they said it unless I had met them. So of course it was worth $5,000. Even the coaching program was trash. So the point is, if you're willing to take action, if you have any semblance of a blueprint, the investment is a no-brainer, but you've got to shed this identity that you're thinking about money coming in for expenses, not investment.
I love it. Nailed it. Nailed it. All right. So I have 2 more to wrap the show. Just some personal questions for you. And those will make you think back a little bit. But if you could go back to your 18-year-old self, knowing everything you know about the world right now, what advice would you give him about what you know, about where his life's going? Just anything you could say, words of wisdom.
So I always kind of be careful about these conversations because I freaking love my life and I don't want to butterfly effect myself out of existence or whatever. But so like, let's just let that be known. But like, if I were to give guidance to someone else in particular, one of the big mistakes I made, though it was the right decision at the time, was that I over-indexed for diversification and under-indexed for control. And so if you think about how I structured my business in its early stages, it was similar to what I just outlined. Find a good operator, raise capital for them, they do all the work. But as you grow, you realize that diversification is a quality North Star as an investor, but it's at odds with many of the things you need as a business owner, such as economies of scale, rinse and repeat, focus. And so now I'm on the other end of the spectrum where my partner and I at ASIM Capital, we only buy deals, only multifamily, only in Phoenix that we're controlling directly. So I went from like a very broad multi-asset, multi-geographic location approach to a very hyper-focused, even within multifamily operators, we're extremely focused. There's a 40-mile radius that we buy deals that we control. So that's kind of a guidance I'd say. You'll probably make more money anyway, but also just don't think about the world of investing and raising money like a passive investor would. If you're going to be flying around the country looking at deals, you got to be taking advantages, using the same software, using the same property manager. It's way better to think about it like that than spraying and praying. 100%
agree. And some of that is really saying no to shiny object syndrome or things that seem amazing and new opportunities. And like, there's power in no. And saying yes to only specific things. And we've been through that too. Almost like the exact same thing. And like spreading ourselves too thin around the markets. And then we had to consolidate the portfolio and just go where our strongest team members were.
For sure.
So it's a learning process, right? So last question for you is,
you know what? Can I just say one thing? I know we're going long here, but I just figured I would have to say this.
Yeah.
The reason everyone struggles with that is that what gets you to somewhere, let's get started, your first million, whatever it is, that is saying yes to everything because you're just trying to get momentum. Earlier in the conversation, you said, hey, dude, we should start a podcast. We got nothing to lose because your opportunity cost for your skill set was 0. I'm not saying this against you. It's just everyone starts. Low skills, plenty of time. Hey, what else are we going to do? Start a podcast, not start a podcast? It doesn't really matter if we do either one because no one really cares. But then what happens is you start to develop skills. You start to develop interest. Other people want your time. All of a sudden, your time becomes valuable to other people and people start asking you for your time and showing you new opportunities. And you have to start saying no to bigger and bigger and bigger opportunities. So the shiny object, and then everyone starts going, hey, shiny object syndrome, don't fall for that. But that's what got you to where you are, is to having this inclination that you've got to do something. But you really won't. The thing holding you back going to the next level is not switching opportunities when it gets hard. That is what will keep you at the current level of going from beginner to intermediate, figuring out that there's problems with whatever you're doing and bouncing that to beginner because you switched opportunities. The breakthrough comes when you outlast everyone else by going through the stuff that no one else would go through. That's why making your 22nd podcast is what's going to get you the results.
I love it. Yeah, it's weathering the storm and just pivoting, but also staying niched down. So yes. I love it. Last question for me is, well, you've built a massive business. You have a lot of connections. You've built a life for yourself. You don't want to jinx it with the butterfly effect. Totally cool with that. But my question for you is, whether it's a chip on your shoulder or some internal fire, like what's your why that drives you to get out of bed every day to do what you do? Man, I know a lot of people have really deep answers for this. Whenever I say that stuff, it doesn't seem honest, right? Like I'll be honest with you. I have a family. I have 2 sons. One is brand new, 10 days old. I've got another that's 2. For me to say like, this is all for them or this is all about them, that's kind of like a given to me. Like, hey, you're going to be safe. Your environment's going to be awesome. There's no world in which that's not going to happen. It's just, that's never been my motivating factor. You know what I'm saying? It's not it's just, for me, that's everyone comes from a different background and mindset and mentality. And if you came from a background where you were challenged, where you didn't know where you're going to get food, like that's a very different experience. But for me, dude, that doesn't need to motivate me. 2 things are going on in my mind constantly: competition and just quote, seeing how far we can take this thing. That's it. That's all you need to show me is that someone's doing something dope, and don't you want to be dope like them? And wouldn't it be cool if you could inspire someone else to be dope like that? It seems like a much more fun and kind of, it's less scarcity. If I was thinking like, I got to make some money because we got to figure out how these kids are going to, dude, that would not motivate me. What would motivate me is being like, I'm kind of sick of flying commercial, right? And how dope would it be if someone was able to hit me up and be like, yo, I just did my 2nd private trip because of you. Now, I don't fly private. I've done it, but it was on someone else's time. The point is, when that person allowed me to go fly private, you best believe I was like, I got to get like this. And so I want more of that. I love it, man. I think that's a raw and honest answer to the question, because I think some people they give the cookie cutter, like, oh, it's for my family. It's this. Half the time, or not half the time, your family comes over time in your life. That why didn't start way back in the day. And for most people, I knew I was going to start to have a family. I knew I was going to have to protect them. Half the battle is you're type A player, where you're just super competitive. Also like me, I don't know what, there's like a belief, maybe it's like the underdog mentality where you're like, maybe people don't believe that I can do this. I see 90% of the world just showing up to their 9-to-5s, doing their thing. I'm like, I'm not like them. Like, I want to be different. And you see other people that are doing amazing things, and you're like, if they can do it, I can do it. And then you also see the luxuries in life, and you see the scale, and you're like, okay, well, that person has this. I want a taste of that. Like yours was the example of the private. Mine's a supercar, right?
Whatever
just example of traveling to see the world before we our time ends, right? Whatever it is, you have your thing. But I think I love your answer, because it's not like the norm. And I think a lot of us are just trying to make sure that we are giving everything we possibly have on a daily basis. We know we were given these gifts and talents, and we kind of can do things that potentially other people can't do. I kind of think we kind of feel like that. And so living out our purpose in a way, whatever that purpose is, and maybe that's not the right word for it, but there's some oomph to it. And so I appreciate that answer. And overall, Hunter, I just want to say thank you so much for joining me today. This has been one of my favorite episodes in a long time, and you're very tactful with the way you deliver your answers. And I think people got a lot from this. So I really appreciate you joining me.
My man. And if you take nothing away from this whole conversation, like the reason I've taken the conversation in certain ways and tried to, hey, if you say something and I don't exactly vibe with it, I'll try to not correct you, but just be like, whoa, this is my opinion. Like the Alex Hormozi thing. You know what I mean? Like, I'm not just going to accept that he said that and it is awesome. Here's why. This is all, including this is all an exercise in what we talked about in brand building. It's okay to be yourself. In fact, you must be to attract your people. So I'll give you just one little nuance there at the end to just close the whole thing out. What you just mentioned, sometimes your motivation comes from people that doubted you. you mentioned. Is that true for you, by the way?
Yeah.
Okay, cool. Here's what's interesting about me. That has never been a motivating factor for me, at least not consciously, ever. In fact, it bums me the F out. It bums me out, dude. Don't like it. I hear Michael Jordan talk about, oh yeah, they were talking crap about me. I went and dropped 60. I don't like that. What I like is when, dude, I think that anything's possible. And dude, I'm the man. And like, oh yeah. And everyone's going to be so stoked for me if we pull this off. It bums me out if someone's rooting against me. I never think about stuff like that. And the reason I talk about that is that's okay too. Michael Jordan's got this mentality. Kobe Bryant's gotten this mentality, but dude, other people don't have that mentality. That's cool. Do you. Just do you, but do it louder, record it, put it on the internet, and you will attract your people. Thanks a bunch, man.
That's a mic drop. But I want to ask you one last thing. Are you firstborn? Do you have siblings?
I do, and I was.
Me too. And it's so interesting. I never asked this question, but I found that most people, high performers like this, are firstborn, whether they have siblings or not. And you were instilled at a young age to become a leader, other people to look up to you. And there's this very interesting, like, just take that with you as you go to the next whatever you're doing today. But it's so interesting that firstborns in the family, for some reason, are like intrinsically infused with responsibilities and things. And a lot of them become high performers and high achievers. And I just smelled it on you. So that was crazy.
That's interesting.
So I love the psychology behind this. But Hunter, people enjoyed the episode. They want to get to know you. They want to network. They want to find the book. Where can they find you on a daily basis?
Go to my YouTube channel. I think I have 400 subscribers there, but I am dropping some bombs that you're not going to hear anywhere else, just about like business and life and not specific to raising money. There's some good raising capital content there. Hunter Thompson, capital raising expert. And then on Instagram, Hunter Thompson official, I believe. Just look me up. And then if you want to learn more about raising money, go to raisingcapital.com. And if you want to learn about the private equity company, asimcapital.com. I used 4 because you guys have been with me for an hour. Check me out. Ryan, it's been an honor. Thanks so much, man.
Thanks so much, Hunter.
We'll talk soon.